2 p.m. Central African time. Welcome to another edition of Market View. I'm your host, Sifiso Nxumalo. And yes, of course, today it is going to be, again, your go-to source for the very, very important latest insights and updates on the economic pulse of our nation. This is a broadcast that is coming to you live from the Eswatini TV studios here in Hospital Hill in Mbabane. And we want to make sure that you stay with us today as we dive into the untapped potential which is lying dormant within our small and medium enterprises. As we know, SMEs are the backbone of our economy, driving growth, innovation, as well as employment. Yet there are sectors still waiting to be explored, sectors that could unlock unprecedented opportunities as well as catapult these businesses to new heights. Earlier today, Tulisile Dlamini, I beg your pardon, he was the president of the newly formed Business Federation of Eswatini, emphasized this very point in an exclusive interview with our esteemed business journalist Nelsiwe Ndlangamandla. She detailed the federation's ambitious plans to uplift SMEs, ensuring that they not only survive, but they thrive in today's competitive landscape. Now, on the global front, we do have markets that are showing resilience and growth. Now, the Dow Jones Industrial Average climbed by 236.77 points, rather marking a 0.58% increase. Meanwhile, the Nasdaq Composite surged by 245.05 points, which again translates to a robust 1.39 gain. Now, these movements indicate investor confidence in the market, which could also, have ripple effects on economies worldwide, including ours here in Eswatini. And the S&P 500 also saw an uplift with a 0.97% increase, which underscores the broader market's positive sentiment. We'll be breaking down what these indices mean. Of course, we have other indices that we normally highlight that we will also highlight today, what they and how they influence our local markets. And all of that doing with Sanele Sibia, our expert economist, on board to help us make sense of these numbers and more. Let's start the show by looking at business news today. All right, Power Culture, we kick off the show by looking at our business news. And the first story speaks to the private sector companies that have joined efforts to find innovative financing for green growth by mobilizing investments for the country. And they will be having deliberations during a 2-day Green Indaba, which will start this Thursday. Now, the partner and director at SNG, Grant Thornton, which organized the Indaba, Vusi Nkabinde, says businesses are affected by climate change, and the Indaba is meant to bring interventions. Let's look at the report.
We've always looked at businesses in a way that businesses have to be financed in a certain way. There is more than one way of skinning a cat. Hence, we are saying, in as much as we use the traditional financing models, there are other green models that are sustainable and that are being financed by even the developing countries in the country that can be used to springboard e-business in Eswatini and at the same time combating climate change initiatives. We've got the green bonds, for instance. We've got carbon credits. Last year, what our greatest takeaway was the issue of carbon credits, which let's use carbon credits as a way of springboarding and financing initiatives. We've got gender bonds, which effectively focus on a certain niche of the market. And then we've got sustainable bonds. Those are all that can be financed in the country. In fact, we believe that by bringing into the fore green projects, people will be willing to pull together, even in shares or bonds, that can then take the business forward.
Mbongiseni Ngambule from the Financial Services Regulatory Authority says the green discussion is important as climate change also affects financial institutions.
Climate risk is not just an agricultural risk, it's also a financial risk that we have to look at, or the financial institutions that we are regulating also have to look at. It is not just the risk. Every time there's a risk, there's also an opportunity for investment. So we are looking at the pension funds and we're thinking that they are supposed, or they have an opportunity to invest in green projects.
The Director of Meteorological Services, Duduzi Lentlengetwa, says the private sector can play a critical role in mobilizing finances for climate change.
Green economy means that we all need to get together. We're all affected and we all have a role to play. So if the private sector comes on board, it means Eswatini it's one step closer towards achieving our goal of being a resilient and low carbon economy. And what I like as well about this year's theme is the fact that we are also bringing on board other groups, in particular gender and youth, who are also important in the initiatives that we need to take on climate action and a green economy at large. Yeah.
The World Bank highlights that the private sector is a critical partner for countries in addressing the green financing gap and confronting fighting climate change and its impact. It states that financing from the private sector will also be critical for meeting the needs for global finance flows. For Market View, Nelson Ngamandla, Vuminkosi Nzinisa Mbabane.
Turning our attention now to the international front, where some bosses might want all their workers back in the office, but a clear majority of U.S. workers crave the flexibility of remote or hybrid jobs. And studies have found that such work, if managed well, will not harm a company's culture or capability to innovate. But some companies concerned about productivity are using software to monitor employees working from home.
Remote work has become the new norm. But despite studies showing remote work can increase productivity, some companies and organizations are introducing monitoring software to make sure their employees are working. It's called Bossware, and it can track keyboard usage and eye movement, take screenshots of employees' screens, and register websites visited. Jared Brown is the CEO of HubStuff, a company that makes Bossware. He says that about 4 to 8% of employees who work remotely use software that can imitate active work.
HubStaff looks at several factors, including mouse activity, keyboard activity, and that is really not what you're typing on the keyboard, but are you typing on it? So pressing any key, it doesn't record which key it is. Maybe there's a script that's opening the same tabs in a browser, every 30 minutes. And it can detect that sort of thing.
But this kind of surveillance may have a negative effect. In a survey of more than 2,000 professionals by the job review site Glassdoor, just over 40% said they feel less productive when their employer monitors their work devices. Human resources and recruiting expert Stephanie Alston says that flexible working schedules have led to increased productivity among employees, and that monitoring software decreases employee satisfaction.
If we begin to start seeing across the board that companies are implementing these employee monitoring softwares, I can guarantee you that we will begin to see a mass exodus of employees. As I mentioned earlier, there is data that shows that people actually overwork when they're working from home.
Anita Williams-Woolley, an organizational behavior professor at Carnegie Mellon University, cites the example of the U.S. Patent Office, which introduced employee monitoring in 2015. Despite an increase in productivity, staff turnover tripled because employees didn't want to work under extreme supervision. As a result, the agency lost some of its top talent.
There's quite a bit of research showing that creativity and insight are facilitated by people having breaks at regular intervals, or shifting maybe and doing something else, or having an interaction with a colleague and then coming back to a problem. And so the traditional monitoring approaches might actually backfire.
But just like working from home, Bossware may be here to stay. According to a 2024 survey commissioned by Forbes Advisor, 43% of workers said their employer monitors their online activities, with hybrid workers reporting a higher level of scrutiny.
There are still sectors that SMEs have not tapped into. Sounds like a very, big statement and a rather big claim to make, but maybe it's not. Let's look into a conversation after the break that is going to really give us an idea of what they mean when they say that.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
And as we get into our Enterprise Watch segment, we turn our attention to a very, very interesting development where still sectors like SMEs, there are still sectors rather that SMEs have not tapped into, which could play a huge role in their growth and contribution to the economy now. This has been said by the president of the newly formed Business Federation of Eswatini, Thulisile Dlamini, during an interview with our business journalist Nelsiwe Ndlangamandla, where she detailed the plans they have to uplift the small and medium enterprises, which are considered to be the backbone of the country's economy. Let's enjoy this conversation.
Welcome to the show, Magedlala. I saw you last week meeting the Minister of Commerce, Industry and Trade, Honorable Manqoba Khumalo. You are a new federation. There are many organizations in the country that are working towards ensuring small and medium enterprises contribute to the country's economy. What is it that's different about you? What is it that you're going to do to help the small and medium enterprises?
We've seen a gap in that in SMEs, we've always said they lack finance, they lack this, they lack this. But then we said, no, instead of concentrating on what they lack, first of all, let us look at what cakes are there in the economy, in the cake of the economy, what pieces are there. We are looking at the sectorial part of the economy. Like we are saying, do we have enough SMEs in the construction, especially young people and women? Do we have enough SMEs in the agricultural sector, which is a very big sector and it's got its own dimensions? And do we have SMEs enough in the retail, in the manufacturing? And this time we're talking about artificial intelligence. What are our young people doing? Because as we speak in other countries, especially those developed countries, they are now using AI and they are shedding away with labor. Then we are saying to our young people, can't you take that as an opportunity to actually do business also? So we are concentrating on the sectors like, is this sector covered enough? Is this sector covered enough? If there is a new sector that we feel it's not covered at all, like I would say our minings, then we ask ourselves, how do we make sure that we exploit those sectors? Who are the people that we can use? We've got our children that graduated from universities, but they don't have jobs at the moment. So we're saying, what can we do to make sure that everybody partakes in the cake of the economy? So after looking at the sectors, then we will interrogate and say, in these sectors, are we fully participating? If we are not, as Swazis, how best can we do it? What are the inhibitors that makes us not to fully participate in this economy, in this sector of economy? Then we will come to the issues of financials, where they will tell you we don't have enough finances, we don't have this. We believe if you tell your story well, there are finances. I would give you an example of just after COVID. Government introduced a program that said post-COVID economic recovery, and I'm happy that I was part of that. So we were looking at what is there that can be actually exploited. What are the investments that are coming into the country? What is it that government has so that we make sure that people actually have a piece or a part in the economy. So we discovered that there were people that were willing to do business, but because of COVID, some of them, there was that drawback. Yeah, they couldn't proceed. But then the financial issue came into play also. And then government said, no, let's take one financial institution and let it help the SMEs. And we are happy that we were part of the negotiation team to make sure that the interest rate was very concessional so that everybody could be able to get money and do business. Which means when we sit down and talk with our stakeholders like government and other business organizations, we can come up with a solution. We can come up with something that actually will actually make finances accessible to each and everyone. But then there comes the issue of education. We did see that there was a lack of training on the financial part. You will get money, but if you have not been trained enough how to use that money, you find that that money would just disappear.
I am glad, President, that you are touching the issue of finances, because small and medium enterprises have always complained that they have a challenge of accessing loans. What do you think should be done to ensure that these young people, these SMEs, continue to be supported financially by the different financiers?
One of the things that we are looking at is to make sure that we train these people in terms of financial management, business management, and we also train them on issues of tax, because there is this hot issue of tax that every business person is screaming left, right, and center. But what we saw, because in our organization we are happy that we have a tax expert, so somebody who will just guide and direct so that people, they will pay their tax willingly and get their profits just as they would have gotten their profits without even cheating the taxman. So we felt the education part is very key, and these are our offerings, because we won't be charging the members. We will actually be developing them, training them to see if there's anything that you need assistance of, especially in the issues of tax. We will take you through step by step so that we give them the knowledge.
As I'm listening to you, you are mentioning there are sectors that the small and medium enterprises need to take advantage of, but you've been in this space for quite some time. Can you be specific? Which are those sectors where SMEs can still leverage on?
What we have discovered is that in the SME space, everybody would go into retail. And there is a gap in the manufacturing. There is a gap in construction and mining, all those things. And we felt, even financial services. And then we felt, no, maybe we have to give them a bit of a training, because it's not about a retail when we talk business. Yeah, it's more to that, because as Swazis, we do have land as well. We can explore more even the conventional ways of doing agriculture, our farming. So all those things we have to take advantage of.
Youth unemployment, President, continues to remain a thorn to the country's economy. How are you as an organization going to ensure that our youth continues to participate in the country's economy?
In the agricultural sector, we really feel our youth can do more there. As I mentioned, that as Swazis, we do have enough land that we can actually utilize. The only thing that we have to maybe look into is how do we put the infrastructure. And I think our young people has to get into the agriculture sector and make sure that they don't intend to go to somebody to hire them. They have to actually develop the spirit of, we are employers now and we can do anything.
I wouldn't be doing justice, President, if I don't congratulate you for being appointed a member of the Citizens Economic Empowerment Council. What is it that we can expect from you as you join this council?
It's not an easy task, but I believe it's paving for us a way forward. The Citizens Economic Empowerment Bill was actually pushed by us SMMEs for a couple of years, and to me it's really a milestone, and I congratulate government that at this stage there is a council now, and that we are part of that council. Well, there isn't much I would say I would do because we are a team. But I think what we have, the interest we have at heart, is that the economy must grow. And for the economy to grow is because the citizens will be partaking in the economy.
It's been a pleasure, President. We are hoping that your contribution to the small and medium enterprises sector will see the country's economy gaining sustainable momentum.
Yeah, very interesting and candid conversation there between Tulisile and our business journalist Nelsiwe and Dlamanda. That is not all for our program today. Let's go for an ad break. We connect with Sanele B, our economist, to decode today's market indices.
Eswatini TV will be at the International Trade Fair 2024, bringing you exciting opportunities to connect with a wider audience and boost your brand visibility. ESTVA is offering incredible specials that include 5-minute on-location interviews, engaging viewers directly, spot advertisements, 30 seconds congratulatory messages, and much more. Do not miss out on this chance to increase brand awareness, generate lead and sales. Our details are displayed on the screen.
21 minutes after 2. Welcome back. You're still tuned into Eswatini TV, enjoying the very best of Market View this Tuesday. Today, we find ourselves on the edge of financial change once again, guided by the belief that, as the ensemble Ngaba declares, I'm destined to shine. And this isn't just a lyric, it's a promise, a reflection of our enduring spirit as we look at the markets today. Mr. Sbia, welcome to the program. A very good afternoon to you. I love to have a bit of optimism when we look at numbers because they tend to be very defining of how economies stand around the world and certainly how I can afford my lunchtime. Let's begin by looking across the Atlantic at the U.S. markets. The Dow Jones, which is the industrial average, climbs by 236.77 points, a rise by 0.58%. Now, a number that on its face suggests optimism, as I say, but we must ask, what lies beneath this surface? I beg your pardon there. I will ask that you unmute your device there. Could this be the first true signs of a recovery when it comes to this particular index, or are we merely painting over cracks in the foundation?
What we need to understand, Mr. Ngumalo, good afternoon to the viewer. What we need to understand about the economy at this point, Mr. Ngumalo, is it is really rallying around an interest rate cut. So the numbers that have been coming around and coming out of the US is, when you look at the employment figures, they did show signs of an increase. But when you look at the consumer price index and when you look at the retail figures, they did show that inflation was really coming, coming into a point where the Federal Reserve Bank would be a bit more stable, more comfortable with letting down the interest rates. So when you look in terms of business performance and when you look at overall other performance, you can see that the fundamentals are okay. But what the economy needs is just that boost to ensure that businesses can be able to afford to borrow and expand their businesses, and consumers are going to be able to expand their consumption horizons as well through borrowing, borrowing, consumption that is financed through borrowing, and also through making sure that we are able to actually understand and survive the cost of living pressures that we have. So what is interesting and what is going to happen in the US tomorrow, we are going to see federal Reserve Bank Chair, Mr. Powell, there is going to be giving his address tomorrow at Jackson Hall. And also what we're going to be waiting for is we're going to see a release of those Federal Reserve minutes for the last monetary policy meeting that was held last week. So what markets are anticipating is the fact that those the address tomorrow and those minutes will give a clearer and understanding and a clearer picture of how many interest rate cuts should we anticipate right now. So right now markets are basing between 2 and 3, given the data that has been coming out. So right now that's why we are seeing, you know, the Nasdaq also breaking what you would call records. The S&P 500, it's at a new time high. Same thing with the Dow Jones Industrial Average, but that is basically driven by the background of an improving overall fiscal and monetary policy environment, allowing for the Federal Reserve Bank to start cutting interest rates in September or in the fall, as they would have it.
Very, very interesting. In a recent interview with Donald Trump, one of the most salient points was how he's going to cut interest rates. But let's keep going. Meanwhile, in the European markets, we're seeing that the picture is far from uniform, Sanele. The FTSE 100 stumbles, dropping by 58.09 points, which is a 0.70%. And the DX edges downward by 17.89 points. I guess with these fluctuations, what do they whisper to us?
So what we are seeing in Europe basically is the fact that markets are waiting to see how the Federal Reserve Chair is going to respond, and also we are expecting the Eurozone to release their inflation figures for July. So that's what markets are a bit jittery about. And when you then superimpose that on the poor performance of the miners, you know, in terms of the other minerals, except for the gold miners, they did not really perform very well. So that's what is pulling the FTSE down and also pulling the DAX down. But then another interesting thing coming in from Europe is the fact that the European Union has actually now recalibrated their tariff story around the Chinese manufactured electronic vehicles from 25% import tariffs to 9% for Teslas that are going to be imported from China, that are going to be built and made in China, then imported into the European market. So that's why we're seeing markets also trying to respond to that, because, you know, before that there was a bit of optimism of improving market share for our European companies. And then we are seeing some stability returning to France. Now the CAC is at 7,500, which is something we had not seen in the past couple of weeks. Now that's purely because, you know, there's the stability, and markets are now getting used to the, you know, the fragmented political landscape within France. So,
yeah, very, very interesting. Maybe before we come closer to home and maybe get into the realm of commodities, allow us to shift our gaze to Asia, Sanele. Nikkei rockets up by 674.3 points, while the Hang Seng, as well as the Nikkei, I believe, as well as the Shanghai Composite, they are retreating. Respectively, are we witnessing the beginning of a divergence here, splitting Asia's economic fortunes that could reshape global trade as we know it?
What you're saying, we are bringing up, Mr. Ngumalo, is something we expected to see post the election, you know, in the US post November 20, when, if and when or whomsoever is going to win, and the new policy direction that was going to come. But what we are seeing, interestingly, is when you look into Japan, Japan is hands on deck, trying to solve and trying to ramp up the yen, you know, making sure that it's stronger against major currencies. While in China, we've seen quite a number of initiatives aimed at boosting the economy, boosting growth, and trying to save the economy from that impending mortgage crisis. But none of those seem to work at present. So yes, the divergences were already there, and then now, coffin on the nail is, you know, the issue of the Tesla story and the exports and the imports into Europe now gaining 9%. Now that's just only for Teslas, Mr. Ngumalo. Any other Chinese-made electronic vehicles are still going to incur that 25%. And we know China is a proud country and a socialist country that pushes their own products. So that's why we're seeing those markets really not responding very well within mainland.
Yeah, I'm very, very loath to skip the JSE All Share Index in South Africa, which has nudged upward, by the way, by 49.35%, which is a cautious gain, a sign perhaps of hope, Sanele. But one that prompts in what keeps our own ESE All Share Index locked in Statsies, but I do want us to get into the realm of commodities as a matter of, just concluding, Sanele, as well as the currencies. What are your sentiments there?
We're seeing gold still holding up above 2.5 as we are waiting for more data to come out and really show whether we're going to have the interest rate cuts that we are waiting for. And then we're also seeing the price of Brent crude really also letting down because there is a sign of a potential ceasefire within the Middle East. Israel is now a bit more agreeable, so that's why we're seeing markets relaxing around the price of oil. So that's why oil is closing at $77 per barrel. And then when it comes to the currencies, what we are seeing there is today we have a relatively weaker currency, but still in terms of a longer term trend, if we look at a 12-month trend, we do realize that it's relatively weaker today, but it's at a very strong position against the dollar and also against the euro. It is just within the yen where we are not seeing that much strength, but that is not to be unexpected because we know the Bank of Japan is really doing quite a lot of work to show up the Japanese yen. And then, as we are waiting the interest rate news to come out, we do know that the dollar might actually also change depending on the outcome of the figures tomorrow and the meeting tomorrow.
Sanele, really grateful for having you on the program today. Thank you so much for joining us, as well as our viewers as well. We thank you for tuning into Market View. We have come to the end of our program today, and certainly we know that you're going to enjoy other programs. This is the end of it. Have a good afternoon. Bye-bye.